Good morning or good afternoon, everybody. We hope you're doing well. Welcome to our next financial and charitable giving webinar. I'm Michael Horn, Vice President at Final Frontiers Foundation.
I'm Daniel Nelms, President of Final Frontiers.
And good morning or afternoon, depending on your location. I am Scott, last name Vigneri or anything close, and I'm the presenter for today.
And I'll hand it straight on over to you and I'll get the slides started.
All right. All right. For those of you who are here or viewing today as we're presenting or in the future, welcome. Thank you for taking the time to be with us today. And we are going to be talking about charitable giving, but just so you know, we are talking about the Bible, we're talking about Jesus, we're talking about the gospel, and that's why we're talking about charitable giving. Just so you know up front, you are welcome to stay, but I want to give you a heads up. So we are talking about charitable gift giving, and today we're going to be talking about charitable gift financing, which when I first heard about this concept, my head tilted, you know, like when you're going to give your dog a treat and you go, hey, and he tilts his head. And I was like,
what does this mean?
This sounds interesting. And so we're going to talk about charitable gift financing, and it's a very interesting concept. It's not for everybody. And most of everything that we are presenting on these webinars are not for everybody. But we're talking about this and that something at some point is going to fit you, hopefully, at some point. But our point here is to make everybody aware of what's out there, because a lot of people aren't aware. I'm working with a client right now that he wants to make a large donation. And he said several times, oh, I didn't know you could do that. Oh, that's interesting. I didn't know you could do that. He said that several times to us. And we brought together and we brought together a team of people and working in each case. So, and you're going to meet in a few minutes, not them personally, but I'm going to talk about one of the vendors that I work with in this concept. So charitable gift financing, let's move on to the next slide. So gift financing, you're taking out a loan to give away a gift. It's can give you the concept of Christmas shopping with your credit cards. And then you have this big bill after Christmas. That's not really what we're after. That's not the concept here. So why would you want to finance a gift? That's a good question. And like we say, like so many of the things we discuss here, much of it has to do with taxes. And believe it or not, the IRS is willing to give advantages to those who are charitably inclined. And Congress has set up and made a set of laws that help people who want to give to charity. And you get certain benefits. And they have other concepts as well. They use real estate. Why would they do real estate? Because they want to help other people get housing. And so they're willing to help people who are willing to help people get housing. I don't know if I mentioned Tom Wheelwright in the past, but he's an accountant and he is Robert Kiyosaki's, I don't know if he's his personal accountant, but he's in his group. And he talks about the IRS gives you breaks for things that they want you to do. Congress wants you to do. And it just so happens that you get the benefit from them as well. And one of those things is charitable donations. Now, a lot of people think charity is just giving your money away. You can do that. You can simply write a check. But there's other ways to do it as well. There's what they call split dollar arrangements, where you give it away, but you get a benefit over time. You get an income from it. And then we got to look at the tax benefits on each side of that. You may get an immediate benefit, but not an income, or vice versa. So one of these is gift financing. You are going to give money one way or another to the IRS. You either give it involuntary and they do with it what they will, or you have a little more control if you donate it to a charity and you get some benefit. If you give it charitably, you have the discretion as to where it goes, and you get certain tax advantages. So let's talk a little bit about how charitable gift financing works. Some of the legal, so to speak. Charitable gift financing blueprint is a strategy that enables charitably inclined high net worth individuals to use a third party loan to make a tax deductible contribution to charitable organizations. The IRS has ruled that when debt to a third party is used to make a charitable contribution, the taxpayer is entitled to the charitable contribution deduction under Internal Revenue Code Section 170, paragraph A, in the year the gift was made. And the deduction may not be postponed until the taxpayer pays the indebtedness. So, and there's the revenue rulings and the tax code that is cited. So if I give, let's say, $50,000 to a charity, I give $50,000 to Final Frontiers. I can take, and I do it with a charitable gift finance. I get a current year deduction of $50,000. And then, but I don't have to pay it off until over a period of time. But I get the deduction for this year. Now you can see the difference in the slides, and down here on the left-hand corner, it says by Wealth Excel. That is the vendor that I use for this concept. And it's Alex Dio. It's spelled D-Y-O, but it's pronounced Dio. And then his partner, Angie Tassoni. I think Angie put together this, but they're out of California and they've been doing this for some time. And there may be others out there that do this. I don't know, but I do know that they do this. So the key benefits of a charitable gift foundation is that you can set up a large cash donation using third-party loans. It's minimum out-of-pocket cash flow. You utilize a grantor trust, and that trust is the actual borrower, not the individual, and it reduces the tax liabilities. It is collateralized by life insurance in most cases. The cash transfer is directly to a charity, and you can set it up so that it's perpetual, gifting through loans. And then you use a gift receipt, you get public benefits, and there's also an overall economic benefit to the economy and the world at large. This is the reason I brought their slides in, because they've already got all this put together. So here we have you, the client. And then if you decide to go with a concept like this, you get a legal letter of opinion that says, yes, this is a good concept and we think it can work. They endorse it. So you set up a grantor trust. The grantor trust is the borrower. The loan provider will give a line of credit to the trust, and it's collateralized by either a already existing life insurance contract, and you have to make sure that that it's set up correctly, or you take out a life insurance policy. And you may think, why would I want to do that? There's a lot of pluses to it, but that's for a different day. And we've talked enough about life insurance and the power behind it that it's a very powerful concept. And so you give the loan to the charity, you've got the insurance contract as collateral, and then you get the tax benefits of giving that gift to the charity. So we have the client and the loan provider. Together, the client will transfer about 10% of the value. So if he wants to give a $50,000 contribution, he'll contribute about $5,000, and then the loan provider will give $45,000 to the nonprofit, such as Final Frontiers. The client and the trust will get a receipt, and then you take that receipt and you put it on your personal tax return. We're going to talk about that in a minute. If it's for a trust, the trust does not file a return. you, the client, would file the return, but you get the credit for it, even though the loan was given to the trust. It's all legal reasons for setting up a trust and keeping the IRS happy. Because the IRS looks at control. How much control do you have? And that's where the tax advantages come from. The less control you have, that's where you get the tax benefits. All right, next slide. So again, we have you, the client, and then the grantor trust, and then the loan repayment. And then you have the life insurance contract as collateral. Now, if you set up a new policy, there are ways where you can set that up that it can help pay part of the interest, or it can be used to pay it off, or there's ways to construct that and build that policy that can help either pay it off completely by itself or help use it, and the loan provider. But it's paid off and you're paying it sometime in the future, but you got an immediate benefit, immediate tax benefit. It's, wow, that one jumped right there.
I'm preempting you here.
Yeah.
Based on the delay.
A grantor trust is the term used in the Internal Revenue Code to describe any trust over which the grantor or other retains the power to control or direct the trust income, debt, or assets. Flow through to the taxpayer or grantor, and the grantor, rather than the trust, will receive the deductions and or pay the taxes. Any contribution of assets to the trust will not result in gift tax. That's a big one there. The grantor trust is disregarded, this is the next big one, as a separate tax entity. And all deductions or income will be attributed to the grantor, not the grantor trust. You are the grantor. The grantor trust is this legal entity. But this is all built on tax code and Treasury regulations, as you can see. What is that? 1.671-2C. If you want to look that up, go to the library and look that up. You're welcome to do that. I have actually gone to the library and sat down with the tax code and read through the tax code when I was learning about 401ks. The librarian had to come over and wake me up.
Tough read.
It was pretty dry reading, but
yes.
And there are people who they have studied this in many. Well, Alex Dio is one of those people who has studied this to make sure that this is all well done. The charitable deduction will be attributable to the grantor and be governed by the Internal Revenue Code, Section 170, regulation, Treasury regulations. So this also is private. We were talking to a client that wanted to set up a private foundation. And I can speak from personal experience. There was a time where we looking at a private foundation. The compliance and the reporting and the administration that you have to go through to do that adds to the cost. But the other factor is that private foundation is not private because you have to file all these legal forms that are public. Why they call it private is a mystery, I guess. But it's just your own foundation. But because of that, they put an extra eye on you. Whereas this is private. And so that's an asset as well. Under the Tax Cuts and Jobs Act, 60% of the contribution, 60% of your AGI, you can contribute. Obviously, there's other factors that are involved in that. But if you qualify, you can give up to 60% of your adjusted gross income. The excess, anything you do over that, over the next 5 years, can be carried forward. Each state also may set their own different limits. Like California, you're limited to 50% instead of 60%. So, some things to remember about this. You get a current year deduction. You need to set up a grantor trust to utilize this. The grantor trust is the one that is the actual borrower. It's collateralized by a life insurance policy. Can be an existing policy if the carrier will work with you, depending on what you need to set up. The interest rate is tied to the applicable federal rate. And that applicable federal rate has been around 3% for about 30 years. It's currently 3.44%. And with these loans are sourced from other nonprofits. So there's an endowment fund. Some college has an endowment fund, and there are many charities that like to loan out money so they can make some return on it. And so the loans are sourced from other nonprofits, other charities. The rate is based on this applicable federal rate. As we mentioned a minute ago, you can claim up to 60% of your AGI, of course, everything, making sure everything else qualifies. It does require a tax opinion letter. There is no gift tax. It is not considered a gift tax. It's not considered for gift tax purposes. So, and it can be used for missions, and that's what this is all about: getting the gospel out to the lost around the world, not just where we are now. And today, with YouTube and the internet, there may be somebody watching this from South America, maybe somebody in China or Africa or Europe. And I think I talked about EB-5 and foreign nationals. You can take out policies as well, but there are, and do the same thing, help missions through your country, your tax laws. Or if you are a foreign national and you want to utilize, it all depends on your visa, of course, but there may be ways that you can do that as well. This is not meant to be advice. We recommend, if you have any interest in this concept, that you reach out to somebody who's professional and qualified and knows how to do this and has the experience to do this. And so, any questions?
One question for you, Scott. Is there like a typical amount, like a minimum amount that you see these policies start at? Is that a valid question? And if so, kind of what range you start at usually?
Usually there has to be where it's cost effective for you. And for different people, it's a different amount. And is it going to give you a big enough tax benefit? But usually I'd start around 50,000. I'd say as a good start from minimum, but there are a lot of people out there. This is typically for what they call higher net worth or ultra high net worth people. And then we get up into the millions in some cases. And to them, it's worth it. And they get to help somebody at the same time. If I'm making $50 million a year or $100 million a year and I get 60% deduction, that's $60 million. Now, most likely in that kind of a situation, I wouldn't get the full 60%. But there are people out there, and it's interesting how many people there are out there that they do have the means to do these kind of things.
Yes.
I'm running across more and more all the time. And the interesting thing about that as well is that nobody's helping them. They don't know where to turn. And so they don't know what's out there. And that's part of the reason we're doing these webinars, is to help people understand what is out there and what's available.
Yeah, you don't know what you don't know.
Yeah. And like I said, I talked to the client, and we even sit down with CPAs and we help them with tax planning for their clients. CPAs, there's 11,000 pages of tax. Last I counted, didn't count it, but there's so much, and what they focus on is returns, doing your returns. And this time of year, they are swamped. And I'm going to be talking to a CPA tomorrow, and she said, "Oh, we are in the heat of the battle right now." But that's what they focus on, doing your returns and get tax deductions. And we have sat down with many attorneys and CPAs and talk to them, and we've had them say, "Oh, I didn't know you could do that. Oh, I wasn't aware of that." And so there's just so much out there, and you're exactly right. You don't know what you don't know. And again, that's why we're doing these.
Yes. Well, wonderful. We don't have any more questions, but for everyone who's watching, feel free to register for Scott's next webinar, which is going to be on the 25th of March. I believe that one is titled Charitable Planning and Reverse Mortgage.
Yes, reverse mortgages. For many times they've had a stigma attached to them, but the government got involved in a good way, and they're no longer the back room, back alley financing deals that they used to be considered. They never really were, but that's the approach. And people think, well, they're going to take my house away. That's not the way it works. So that's why
Look
we're
forward to
gonna
learning about that.
So,
Well, you know, I had one thing I could potentially point out. You were talking about a private foundation versus a public foundation. My understanding, and this may be incorrect, it gets back to what you were saying about control. In a private foundation or a family foundation, the individual or the family or the small group has control over what the foundation does, its decisions, what it grants. And I think it's maybe because of that the amount that you can deduct is different than a gift to a public nonprofit.
and that's also why there's more stringent reporting and record keeping and administration. And even though it's called a private foundation, like I said, it's not really private. And yeah, the cost.
It's private in that you get to decide how the money is used, I guess, versus
Right.
someone else, and that's where all the strings get attached.
Yeah. And so a public, and Final Frontiers is a public charity, and so that's you know where your dollars are going as well, and they've got a good rating with different watchdog, we'll call them watchdog groups that watch over charities, and Final Frontiers is one of the best ones out there. And yes, I'm giving you a plug, a shameless plug, because I believe in what they're doing. And
Thank you.
It's been over a year now that we've been working together.
Yes.
And the longer I work with them, the more impressed I am. And I'll say this, to the point where I'm giving my own money. And I don't mean that to sound, hey, look at me, how wonderful I am. I'm just saying I believe in Final Frontiers to the point where I'm giving my own money. And no, I do not get any compensation from them for this. And there have been some situations where I set up some things and I could get compensation, but I said, no, I don't want it. I'm here just to help people. So anyhow, got off on that tangent. So
We
yes,
certainly
you're right.
appreciate you.
Yes,
Yeah,
sir.
it's been tremendous. But and Daniel, you're exactly right. Private versus public. There's if you got millions and millions, of private foundation may be worth it. And that 20, 30 years ago, many people set up private foundations. It was a different ballgame back then. But now it's so many things are changing. It can still be a viable thing for people, but
I think when they find abuse, so they tighten the screws a little bit and so makes it more difficult.
Yeah. And unfortunately, there's been too many cases where it was abused, and people took advantage of it. So the government's like, okay, well, we're gonna have to step in. And so just give it to a public charity, and don't have any issues. And like I said, you get benefits from making donations to charity. It's not just giving your money away. You get certain benefits from it as well. You get make the IRS happy, and you're happy because you get deduction. So,
and win.
and the charity is happy. Think about this: $50,000 to Final Frontiers. How many motorbikes could they buy for pastors in places like India and Africa and Japan? Well, not so much Japan, or Philippines. How much more could they get the gospel out? How many more people could get saved? How many more children's lives could be changed? And it's just tremendous. And my
And if
niece,
anyone has 50,000, that's about 37 motorbikes. Just so you know.
that actually is a lot.
It
That is
is.
And wow, what an impact that could make,
And
or help finance a building project. Because many of them are meeting out in the open,
Yes.
and in some cases, that's okay, but not always. So
it is nice to stay out of the rain when you can.
the rain and the sun, and in some places the sun just beats on you.
It really
Anyhow,
does.
I guess we're getting off on a lot of tangents here. So, but
This is
yes.
missions, guys. We're geeking out.
Sorry.
All right.
Well, thank you for
I'm
joining
looking forward
us.
to the next one.
And everybody, feel free to go to our finalfrontiers.world/webinars. That's where you can sign up for any upcoming webinars. You'll see Scott's next one on 25th, and we also have one, a ministry one, on the 22nd with Oleg and Laurie Insky from Ukraine. So
Really?
register for that too if you're wanting to get plugged into Ukraine.
And the past ones are on there too, right?
Yep. You can view the past webinars. They're all up on
Fantastic.
YouTube, and there's a link there, so you can catch up on those.
I think the Inskys are going to be at our church, I think in April or May.
Oh, right.
So
Well, you get a preview.
that works. Hopefully that's a ways off yet, but
Well, here soon.
so,
Time flies.
exciting. Yeah, the ministry in Ukraine. I mean, wow. I'm going to get off on another tangent. So I better just... So,
All right, everybody. Thanks for joining us. Have a wonderful rest of the afternoon, and we'll see you next time.
you as well. Thank you. Bye-bye.
Bye.